Welcome to the Best of US's Two Regular Guys. I am Trent, and this is Mark over here. And we're today going to get into the CPI, Jerome Powell and his discussion on the Washington committees and all that. We're going to get into unemployment, talk about Jensen Young and his selling of his Nvidia stock. Well, and whatever else we can think of. So thanks for joining us. Let's get going.
Okay. So it's been an interesting week. We had a nice holiday in the middle of last week with a half a day on Wednesday and Independence Day on Friday. And everybody seemed to go away or Independence Day on Thursday, and everyone seemed to go away on Friday. So it was kind of like a vacation week. Volume was low. Not much really happened per se. This week, we kicked it back off. It's interesting to see. Last week, we talked a little bit about market caps and I think last week it was the top 10 companies were 35% of the S&P market cap. So
Yeah.
this week it's 37% because they keep going up.
Right.
So it's even more dangerous. I'm going to show you the chart, but our spread between the equal weight and the market cap weight index funds, it just keeps getting wider, and it's diverging, and we won't be able to. This won't last forever. This just can't last forever. If we start getting a little bit of a flat tire in one of these big techs, and remember it's earnings season,
Right.
So I don't think it's going to take much, Trent. I mean, there's so much hype about these. If they don't actually smash it out of the ballpark or have good guidance, what's going to happen to these guys? What's going to happen to Nvidia, and we got Taiwan Semi tomorrow. Well, tomorrow as this video, but Wednesday, the day this video comes out with their sales report, and that'll be an interesting kind of look forward to what Nvidia is doing, right?
Yeah, I mean, you think about it, chances are their earnings will meet expectations. It's the guidance that they give that could blow the whole thing up. And I think, my thinking is we've had such a demand for their product and service. And at some point that levels off. At some point you fill the bucket up and there is no more room in the bucket to fill. And so then they start to guide lower. And I think that'll be the key, because they manufacture Nvidia's products and they manufacture, I think, AMD's maybe a little, or a couple others. So there'll be a leading indicator to what the Nvidias, AMDs, the Intels of the world when it comes to semiconductors or GPUs and the demand for them. And then that'll give you insight to what the Nvidias, Intels, AMDs will start to guide in the coming quarters. And so to me, that is since they manufacture the majority of all these GPUs and CPUs and stuff like that, they need to be paid attention to, just as was a Micron who reported a month ago, and they guided lower because of demand. And so I think you may see the same thing out Taiwan Semiconductor, and that could be the start of this rolling over the bell curve, the right side of the bell curve on this run. And I think if you look at the stock prices on Nvidia, and you look at the charts on Nvidia, and you look at the charts on Taiwan Semiconductor and all of them, they're all sort of hitting a ceiling, a resistance level. And you've talked about that in the past. There's major selling up again. They're running up against it. And I think, I have a little indicator that I've created, and it's telling me you don't want to be in these guys because their run is coming to an end.
Yeah. So now let's take a look at what we're talking about here. Okay. Sit up. Yeah. This is the SPY, and this is the market weighted. Okay. This is SPY, and we put in, again, we looked at it last week. We put in the RSP, which is the equal weighted S&P 500. And you can see right here, since about the end of May, we
Mhm.
had a split. And you see that the top 10 stocks, mainly technology stocks, Nvidia, Meta's, Alphabet, Apple, Netflix, have just made this skyrocket. This is 37% of the market, these 10, well, less than 10 companies. But the equal weight, the other, 490 stocks, is going the other direction. We're diverging still.
Right.
Okay. So if we see Nvidia or or Taiwan Semi tomorrow, which will be today on this
Yeah.
video, come down and it starts, decreasing this and starts making this converge more. This isn't going to go up because of that, okay?
Right.
Because these stocks would have to do better, and they'd all have to do a lot better, to take off the market weight that we see here. So when this, or if this would happen to start moving down the market cap weighted, you're going to see the rest of the market move down too, in my opinion.
Yeah. I think, and because those 7 to 10 stocks have such a major weighting, that 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 move down in SPY will be drastic. As long as now there is that potential that those companies will report good earnings and
Yeah,
give good guidance. At some point, things come to an end.
yeah.
It's a matter of when. And so I think at these levels, you just have to be real cautious and have protection measures put in place.
And we're not just saying that because, we're alarmist, because this 37% gap is the widest gap since the third quarter of 1990. And what happened in 1990? Okay,
Yeah,
that was the .com.
right.
Okay, so it's history. Okay, so I'm not saying history will repeat all the time, but it certainly remembers itself, and um, we should use history to kind of be cautious about going forward. At least that's the way I think. Others
I
may be different.
I think it's also human behavior. If you look at the really true fundamental fundamental of Wall Street, it's about making money, and it's about putting money in. And you talk to a lot of, if you ever get a chance to talk to like true traders, they don't care what the company is, what it does. They just want it to move, and they want
Yep.
to profit from it. And I think you could see that rotation we've seen in Nvidia over the last couple weeks, and then the rotation in that I'm seeing into Tesla. Tesla got beat down. It came down to a support level, and it went sideways. And then in the last couple weeks, it's made a move up, and a pretty substantial move. Yet you go to Nvidia or SMCI or any of these other semiconductor stocks, and you see them not making that trend higher, but a trend lower. And to me, it's a rotation. If I'm a trader on a desk and I'm a sophomore trader and they give me $3 million each year to trade, and I make what 50% of the profits they make, whatever it is, right? I got a chance to make millions of dollars. I'm not really caring a whole hell of a lot about the future of a company. I'm looking at the future in the next from 9 o'clock or 8:30 Central to 3 o'clock in the afternoon, and I'm just trading the volatility, and I'm looking for opportunity. And I
Yep.
think that's what you're seeing. You're seeing that rotation happen right
And that's what we do in swing trading. I don't know what a lot of these companies do. When we swing trade, we just go off the technicals. And the big institutions, they don't even have to look. They've got computers doing this for them. They've been doing this for years.
now.
Okay.
Right.
And they just program trade. Okay. So they don't care. The
Yeah.
computer does not care. Okay.
Yeah.
They just make money, like you say. They look at movement, they look at volume, they look at momentum.
And I think now you'll have some people on the tribe who say, I'm in it for the long term. Kerry is
Which
one
is
of
fine.
those people. And that's awesome. I do think, though, you have to take advantage of the opportunities that are presented. For instance, if you had followed Kerry's suggestion last year, got into SMCI, got into Nvidia, you rode that up, you made a lot of money. What happens? I mean, how do you feel if it rode it all the way back down?
Right.
right? Why
Yeah.
not take 70 if you've made that move for I don't know what Nvidia's move was, but let's just say $74 to in today's numbers to 130. Well, wouldn't it feel good just to take 50% off the table, let it come back down, and then buy it and accumulate more shares? I
Right.
mean, to me, that is a long-term investor.
But
That's you
it
have to
takes,
manage it.
no, you're right. But it takes work and it takes education. Like we try to teach, the swing trading side is when is a
Absolutely.
good time to get out, and the number one lesson that we try to teach is don't fall in love with a stock because it cares nothing about you.
Right.
Okay. It'll ditch you faster than you've ever been ditched before in your life.
Right. And it won't shed a tear.
Yeah.
It
Yeah.
won't even write
And
a
so
letter to
that's,
its mom. It's
yeah.
saying, I
And that's
destroyed
what we call
somebody.
that's lost opportunity cost. You could have had that money out. You could have put in the treasury bill. You could have went on vacation with it. You could have
Right.
done whatever you wanted with it. Instead, now it's underwater and you're waiting for it to come back. You're thinking to yourself, why didn't I get out when at the top? Then the people, because there's psychology, because the people who do get out and it goes a little higher, go, why did I get out so early? Which
Yeah.
is why we use strategies like, hey, take half off, take three quarters off, play with house money then. Let it sit in there. Take that money and go utilize it to make yourself a little bit more wealthy on some other stock.
Yeah.
Tesla, like you said.
Yeah. I look,
Yep.
something that I believe is that you have a core portfolio and then you have satellite portfolios.
Yep.
And that core that's that long-term holding. It's very mostly fundamentally conservative. Its movement is not too great. Its standard deviation is not too great. Where you get added benefit and where you get the bigger return of the overall portfolio is that more alpha driven, higher risk or higher beta um, portfolio. And that's where you can utilize the swing trading approach that you teach in the Platinum channel. And that is how to read these markets, how to capitalize. Like one of our members capitalized on the Tesla move from, I think, $190 to, I think he got out last week around 252 or so. That's
Somewhere.
and he had a chunk of shares. He made a ton of money on that, but he took his
And
profits.
and he kept some in there though. He didn't take them all off.
Right.
He took a majority off, but left some in just in case because now he's up. He's playing with house money.
Yeah.
But these kind of traders, you have to know what you're doing. You
Yeah.
have to be educated. You have to be willing to put the time in and learn it yourself. We're not going to tell you get in here, get out there. We're just not because we don't know your situation. We don't know what your long term goals are or your risk tolerance. Some people are more risky than others. I'm very conservative in my risk factors. Some others in our platform they'll take more risk,
Yeah.
and that's fine. It's their
Yeah.
situation.
But it's
Yep.
having the knowledge, the tool set, the toolbox to go make those goals and dreams come true. And I think that's really, what we're pounding the table here about. But
Yep.
anyhow, so
So let's
what
let's move
else is
on
on your
to
mind?
let's move on to Jerome Powell. Okay, everyone is always focused on Jerome Powell, and for I don't know how long. It seems like forever. It seems like half my life now. We've been waiting for Jerome Powell to decide when is he going to reduce rates. And why does it matter to me? Because I'm looking at a stock market index wise that is going up and going up and going up. So why do I care? But he's testifying today, Tuesday. Okay,
Yeah.
as of this video is being made, and tomorrow, Wednesday, okay,
Mhm.
in front of Congress, okay, and I believe Janet Yellen is also doing that, okay,
Okay.
and the markets are watching because they want to know, is he going to lower rates in July or September or December or whatever, and we don't have to worry too much about that because uh, he's already told us basically. Last week we had the Federal Open Market Committee meeting, okay, and then they released we didn't have the meeting, we had it in June, but they released the minutes, okay,
Mhm.
and it showed that officials don't deem it appropriate to lower borrowing costs until additional information had emerged to give them greater confidence that inflation is on track to their 2% goal. The minutes show that several policymakers, meaning the Fed people, remained ready to raise interest rates if inflation remained elevated. And so then today he's in Congress. I just grabbed a little clip of what he said today. And he said, Chair Powell reinforced that the central bank, this is in front of Congress, does not expect that it will be appropriate to reduce interest rates until it has gained greater confidence that inflation is moving sustainably towards 2%, with data for the first quarter this year did not support such greater confidence, remarked Powell to Congress. So I'm not seeing that we're going to see any interest rates anytime soon, at least, unless Jay Powell is a liar. And so far for the last 18 months, this is what he's been saying. And if you go look at everyone in the Fed, they say the same thing for the most part.
Yeah.
What if we're expecting it, I don't think it's happening.
No, I don't either. And honestly, looking at the inflation numbers of, CPI and that number, we've talked about CPI and sort of how it's skewed, how they sort of minus out the stuff that's really important.
We talked about that last week.
Yeah. And so this is US Consumer Price Index,
Right.
US Core Consumer Price Index. This is what they talk a lot about. And then it gets into food, energy, housing, and then renting. And so I can put it, set up a time frame. So since 2020 to 2024 today, you can see the increase in core is up, or not core, but US Consumer Price Index is up 20. The core is up 18. Food is up roughly 26. Roughly 30 on energy, housing 22, around to 23, and then renting is up 22. And I find this interesting because they minus out food, energy. They don't include rent, if I remember right. Correct me if I'm wrong.
I think they have some housing in there. That's yeah.
Yeah. Okay. So if I look at a 1 year, what this is telling me here is now in a year, energy is only gone up, was at 3.4%. But what I'm seeing here is if they're trying to get to 2% inflation rate, if you really look at it, we're not anywhere near it. We're increasing, slowly increasing each month. I mean, this is May. We were at, let's just use food was up 1.64% in a year. Today, food is, or excuse me, am I looking at the right thing? Yeah, food is up 1.64%. So really it hasn't moved much. But if you look at energy has gone up, these other core elements, I went and filled up the car today. I'm paying a little bit more than I was a month ago. So in my opinion, they're going to show you the core inflation rate or core index here, or the percentage, and I'm looking at the percentage change there. And my opinion is they're going to be forced to raise rates. And I think it'll come after the election. This will continue on. We'll continue to borrow money as a government. We'll continue to the demand for products will slow because people are broke. And so in my opinion, I would not be surprised if we got into March of next year and we see a 25% or 25 basis point move in Fed funds rate from where it is today.
I mean, here's what you were saying about gas. This was April. This was gas price. This is USO, United States Oil. This is oil prices in April, flat. Then we came in. This will be the report coming out this week. The CPI. This is what happened. This is what happened to the price of oil in June. Okay, and here we are today. So this was your increase in gas here. So that's not going to show, that oil price, that energy went down. It's not in the core, but it's going to contribute to people saying, I don't care what you say, Jerome Powell, whether it goes up a tenth or down a tenth, I'm still paying more. Okay.
Yeah.
End of story.
I think here's the thing. Let's say they got to 2%. Okay. They got to 2%. That was their target. They got to 2%. How they did it, I don't know. When you really look at what drives all of this, it's the US consumer. And if the US consumer is not buying, even if they get to inflation rate of 2%, That is the bigger factor in all this. That is, to me, that data is more important than what they say core CPI is. It
Oh,
is what
absolutely.
you and I are doing on a financial basis.
Well, and how do we feel secure? Well, jobs. Okay.
Right.
So we've talked about the jobs report and how screwy these job numbers are. So the jobs report came out last week. Okay, and the Bureau of Labor Statistics reported that in June, the U.S. added 206,000 jobs above the 190,000 expected. However, what happened? Both previous months were revised lower. Remember May, 272,000 jobs? They
Yeah.
revised it to 218. Remember April, 165,000 jobs? It went down to 108. So with those revisions, employment in April and May combined is 111,000 lower than previously reported. Okay. So
Yeah.
where are these jobs coming from? Government.
Yeah.
Government payrolls in the jobs report went from 25,000 to 70,000, almost 3 times. Okay, that's where the jobs are. Uh, when you look at it, then you have the unemployment rate. So we have all these jobs. So the unemployment rate went from 4.0% to 4.1%. Okay, in May, it's
Mm-hmm.
the highest print since November of 2021. Okay, so here we have on one side, we're making all these jobs, everyone's employed, and isn't it great? But our unemployment rate goes up. So when you look at it, the number of long-term unemployed, those jobless for 27 weeks or more, rose by 166,000 to 1.5 million in June. This measure is up from 1.1 million a year earlier. So in June, the number of part-time workers rose 50,000 to 28.1 million, while full-time workers dropped by 28,000. This means that since June of last year, 2023, the US has added 1.8 million part-time jobs and lost 1.6 million full-time jobs. So if you don't have a job, you're not spending money.
Right.
Okay.
Yeah.
And so how are you paying for things? Well, interesting enough, the US Consumer Credit Report came out yesterday. And guess what that said? Total consumer credit in the US rose by 11.35 billion in May, up from 6.4 billion rise in April. Okay. So
Right.
almost double and surpassing market expectations of a $10 billion increase. This brings the seasonally adjusted annual growth rate of consumer credit to 2.7%. Revolving credit, which is credit card debt, experienced a substantial rise, reaching 7.01 billion. This marks an annual growth rate, okay, of 6.3% in credit card debt, a notable rebound from the 0.8% decrease that we saw last month. Non-revolving credit, which includes auto and student loans, also increased, reaching 4.337 billion. This category saw the growth rate of 1.4% annually, and this is a slight slowdown compared to the 2.4% recorded in April. Less than 50% anyway, that's what we're seeing. So tell me
Yeah.
about the labor report, tell me about unemployment, and tell me that everyone's doing well right now. You combine the labor report with what we're seeing in the credit, people are spending on credit to live or their retirement savings.
Yeah.
You know,
I
it's that can't last forever.
No, it can't. And I think, I have seen it recently. One of our members had to downgrade his membership because he's like, the cost of living is outrunning me right now. I want to learn, I want to be a part of this. Yeah, I'm broke. And
Yep.
and that could be how they manage their money and how they manage their personal finances. But I think the increase in expenses, you know, increase going to the grocery store, increase in filling up your car, and then not the adjustment in your income to equal that is catching up to a lot of people. And I would say
Well,
even rich people, like
well,
rich,
yeah.
rich people.
Think about the retired people now. I just saw a story that less than 50% of Americans in retirement believe they have enough money, and they're 90% are worried about rising prices, devaluing their savings. And that's according to the US retirement survey. Okay.
Yeah.
So you think about the people who are on Social Security, okay, who don't have raises, but we have cost of living raises. So Social Security, beneficiaries, they get an annual cost of living adjustment, and that's called a COLA to
Hmm.
preserve their buying power, as prices rise around the country. But the Senior Citizens League said the COLAs have become less and less likely to keep up with inflation over time. Indeed, while benefits received a 3.2% cost of living in 2024, two-thirds of the surveyed retirees said their expenses increased more than 3.2%. And if you remember last week, we went by category, and everything's gone up 5 to 6%.
at
So
least.
that implies that Social Security benefits are losing buying power this year, which may explain why so many retired workers are facing financial hardships. And unfortunately, the problem is only likely unlikely to improve next year because Social Security benefits are on pace to get an even smaller COLA in 2025.
Yeah.
What are they going to do?
I'll tell you what they're going to do, Mark.
Tell
The
me.
answer is what is your biggest asset in retirement? It's your home.
Mhm.
It is your home. And when you see your investment accounts or your income coming off those investment accounts decline, you start to get desperate. And so what do? You put your house on the market because it's paid for most likely, and you adjust your lifestyle, you adjust your living, and you go to rental. One, your kids don't want your house, most likely. So they're going to sell it anyways. So if you can sell your house and sell it for three, I think that right now the national housing average is 319,000. You sell that, it's 319,000. You put it into some treasuries, short-term treasuries, make 5%, roll them, and you're making $15,000 a year on that money. And couple that with your investment accounts. That's how you live the rest of your life. And
Here's the problem,
I
though.
really think that's what's going to happen.
Here's the problem. The cost of rental has gone up, as you know. Plus, what a time to sell your house. Maybe you should have sold your house 3 years ago
Oh
because
yeah,
you've even said it, houses aren't moving. And why? Well, the average interest rate on a 30-year fixed rate mortgage increased by 10 basis points this week to 7.03%. Okay, so here I am. If I'm going to sell my house to somebody, and I need to go find another house or something, I'm not going to sell it, when I have a 3% mortgage rate and go
right.
pay 7 on a house that's inflated because the houses are inflated and the housing prices aren't coming down, even though we're seeing the houses sitting on the market,
Yeah,
and if they do come down, like you said, no one's coming to see them. And you live in a very, highly, desirable area.
yeah. I had a dinner with a friend of mine. He's a builder, and I always ask him how's it going, this, that, and the other. And I'm like, he has two projects going, and of course they're six-figure project or seven-figure projects. In my area in Florida, everything's seven figures, right? Fortunately, I jumped in when it wasn't seven figures. But I asked him about one of his houses, and he's like, "Yeah, we had some issues with blah blah blah." And I'm like, "Oh, so you still have it? You haven't sold it yet?" He's like, "Yeah, we pulled it off the market. We have to fix this issue because somebody came in and broke one of the showers, and it flooded the whole shower, and then flooded and dropped the ceiling out of the first floor." And I'm like, "Holy crap!" Somebody basically, anyways, sabotage, whatever you can think happened. But I got to thinking, I'm like, didn't you finish that house 6 months ago? I didn't ask him that, but in figuring out the timeline of it all, he hadn't sold it yet. It's been done for 6 months. Nobody's buying, and he's got another project that's bigger. And I'm like, oh boy, I hope for his sake, he's been through this before. And what I'm hearing is, especially on the high end, people are not buying high end homes. The mid level, the national average is 319,000. I think you're starting to see those homes not be picked up as fast because of 7.3% 30-year mortgage rates and the cost of living.
Well, yeah, people are tapped out on their credits. You
Yeah,
can't go in and get a loan. They look at you look at your credit and your credit score, and they're like, "Oh, yeah, I'm sorry." You know, you're tapped out. You've got a car loan. You've got all your credit cards are tapped out plus a school loan. Okay. Yeah, you don't have any money left to pay a mortgage
No.
or 20% down, you know?
Yeah. Yeah.
So
And I'm fortunate enough to actually going to spend a weekend with the head of a mortgage department this weekend. So I'm curious to hear what he has to say about the mortgage industry and what they're seeing. So,
well, it's going to be interesting. I mean, even the overnight financing rate that, that the Treasury charges is at 5.4%. That's the highest since January 2nd. Okay,
oh
so
wow.
interest rates are not going down.
Yeah.
And so it's going through the economy. And we've always talked about the lag effect of interest rates is what, 12 to 18 months, and well, we're getting there.
Yeah. I think all of these raises we've seen um, are starting to filter into the system. And
Let's go ahead.
no, I mean they're filtering in. We're starting to see
Well,
the effects of this.
absolutely. And as it you just said a little bit ago that you think the rich are actually being impacted by this, and they are. And it's a fact.
Mhm.
Jeff Bezos is now a resident of your home state of Florida.
Yeah.
Okay, and since he moved there, he sold a bunch of shares of Amazon, and that's saving close to $1 billion in taxes. Okay, from when he was in Washington State, which has a capital gains tax.
Right.
So CNBC reported that Jeff Bezos from Amazon has made headlines again, not just for his massive stock sales, but for the substantial tax savings that come with his recent move to Miami. In a series of transitions that have caught the attention of financial analysts and tax experts, Bezos has sold and plans to sell a total of 75 million Amazon shares worth approximately 13.5 billion at current market prices. And it says the timing of these sales particularly noteworthy, coming shortly after Bezos announced his departure from Seattle, where he had resided for nearly 30 years. The tax implications of this move are staggering.
Yep.
Based on his initial sale of 50 million shares earlier this year, Bezos is estimated to have saved over $600 million in taxes with the additional planned sale of 25 million shares. As revealed in the recent regulatory filing, his total tax savings could approach $1 billion. Now, what would Bernie Sanders say about paying your fair share there, Jeff? You
He
know?
would flip out. He probably
Yeah.
is flipping out. But
But you know what? It's legal. People have the right to move to where, they want to live.
yeah,
And if you want to have a high tax state and you see it's happening in California, you see the exit in California, okay?
yeah,
That's what's going to happen.
yeah. I think and that's um who was it? Well, Ken Griffin, head of founder of Citadel, moved his company out of Citadel or out of Chicago a handful of years ago, I think 3 or 4 years ago, and he's now a resident of Florida, and he's
Yep.
a multi-billionaire, makes billions of dollars a year. Um, these guys, the rich people recognize the amount of taxation they're paying, and they're at a point in their life where they're you know changing chapters of their life. Bezos went from CEO of Amazon to now he isn't. And so he's rotating his portfolio. He's managing his portfolio, but he's also managing his tax uh responsibilities. And he's moving here. They moved to Tennessee. Um, those are two big states that people have
Yeah,
moved to.
yeah.
Texas,
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 yep.
you
Yep.
know,
South Dakota,
was it
Wyoming,
Tesla's moving
Austin,
um
headquarters.
their headquarters and
Yep.
making Texas their state,
Yep.
basically, where they reside. So,
Well, people are going to go where money flows to the value, and so does savings. And I was in Miami last December, just 7 months ago, and I
mhm.
was just so surprised because I hadn't been there in a while. Miami, I think, is going to be the new financial capital of the United States. I think more New York companies and financial services companies have been moving down there. I was surprised at all the signs of all the big banks and the brokerages and everybody down.
I in 22 April of 22, I went to a Bitcoin conference, and they had the three mayors of Miami on stage, and they made the biggest mayor of Miami made the comment, our goal is to become the financial capital of the world. We want to take New York's, status as the biggest entity of financial. So we're encouraging, in this case, the crypto world to come to Miami to set up shop in Miami. And now you're seeing it with the other big financial institutions. They're doing the
Yep.
same. They're all
Yep.
moving there. So they're making it, tax,
Friendly.
beneficial and
Yep.
tax friendly and, employment friendly to set up shop in Florida. And I think that's where you're going to see a lot more of this in the near future,
Yep.
as well as in Texas as well.
Yep. Well, let's talk about one more rich guy. And
Okay.
the chief executive officer of Nvidia, Jensen, is it Hung? Hung?
Jensen Hong. Yeah.
Yeah, Jensen Hung.
Juan.
He
Jensen
he
Juan.
unloaded nearly $169 million of Nvidia stock in June, and that's the biggest share sale to date. And his sale of 1.3 million shares of Nvidia came in a month, which was June, when the company's market value rose above 3 trillion for the first time. And that's when Nvidia became the world's most valuable company for a short time. And now his personal fortune exceeds $100 billion. And he's not the only one cashing in. Many of his company executives and insiders sold more than 700 million in shares in the first half of the year. This is far greater than insider sales during any other part of the company's history. So Hung has sold more than $1.1 billion of stocks since the start of 2020, and filings suggest he plans to continue selling shares this month, and he remains the second, even though he remains the second largest shareholder in Nvidia behind, I think, iShares. So these guys are selling; they're not
Yeah.
buying. Okay, and you always get the statement that says, "Oh, they needed the money to buy a house. They needed the money to take a trip." Yeah, well, I don't
Right.
think so.
Taking the
Yeah,
whole
they,
family out to
my
out to
opinion,
Wyoming.
they need the money because they see that the stock is as high as it's ever been, and they're like, "This, I'm not an idiot. I can see what's happening in the next, 1 to 5 years. I'm just going to cash out. I'll
Yeah.
leave some in there, but why
Yeah.
not? So if you think these guys are doing it, all of them at the same time need to buy a new house or move,
Right.
have a trip to Europe or whatever, So I just laugh at it, and people say I'm staying in because of that. I think it's something that you have to be concerned about, at least aware of that. You go back in history and see when people like the last time Elon Musk and his brother sold, it was at the top. You can
Yeah.
go back and see these guys sell at the top. They don't sell at the bottom.
Right. Yeah.
Yeah.
And I think that should be an indicator if you own these companies, any company. If the C-level execs, biggest shareholders of a company, are selling their own stock and it coincides with a all-time high, maybe it's a sign. I mean, if that was an indicator on trading views, you would follow it. Oh yeah, this is the C-level exec indicator. Oh, it's peaking. They're selling. I'm out. You would do it. But if you just hear them doing it, and you've made a ton of money, and you're going, oh no, it's going to go higher. Let me introduce you to a friend of mine who is in the real estate business in from '04 to 2009. Let me take you on a road trip of his life. It's the same thing. You have to know when to get out. You have to know
And
when
they
at
know.
least reduce or hedge your position.
I mean, the way I look at it is if I think that the best value for my money is in my company, okay, I'm going to keep it there. But if I think there's a chance that, I can get out with some profits and opportunity costs, then I'm going to pull it and put it somewhere else.
Yeah.
Okay. I personally don't believe that these people need this much money to go on a trip or to,
No.
buy
Pay
a
for the kids'
house or
school.
no, I don't think they pay for anything. I think they just call their bank and it's done, and
Yeah.
so, and that's my personal opinion. I've never been a billionaire. I'm working my way up, but
Yeah.
as a regular guy, and I'm on the 400-year plan to get there. But you know,
You never
uh,
know.
well, you never know.
You may win the lotto.
If my Bitcoin hits 1 million, there we go. All right,
Yeah, there you
then
go.
I will sell my stock and whatever. So, but yeah, I mean, so anyway, I guess the whole idea is, from our point of view, we're just two regular guys looking at the world that we live in. We have a nice group of people who are members of the Platinum Club, the Platinum Channel,
Yeah.
and we get together all the time. And these are what we talk about, and you know, what regular people see instead of what CNBC tries to tell you, or what the Department of Labor Statistics is telling you, or what this report tells you, or what Steve Leisman tells you, or frankly, what Jay Powell tells you what he's going to do. Who
Right.
cares? Okay. We sit here every day and we look at stuff, we look at stocks, we try to get in and get out when we need to. We have a long-term plan with Kerry. If you are more of a big investor, okay. And so we try as regular people to help regular people. And that's
Yeah.
what we do.
I'm with you. That's at the end of the day, it's, we've both been in the industry. Kerry's been in the industry, and we see how it works. And our whole goal is to give you the advantage against the industry and teach you how to make the money, and most importantly, how to preserve it. That's the most important thing. It's great to make it. It's just horrible to lose it. And we've all done it. So, well, all right, Mark, anything else you want to hit on?
I think that's about all my gripes for this week. Anything from you?
Um, I mentioned last week about, or the week before, about on the Friday call with Kerry about this rotation in the crypto mining companies towards data center services, because they have the infrastructure, because there is a movement in demand for data centers. We're starting to see interest in that. I know Kerry took a position today in Iris Energy, which is IREN. It's had a massive run up here in the lately, but their business model is changing to support that. And I think those are ideas. That's an industry that is looking at a rotation or adjusting their business model. And I think when you're looking for companies or looking for opportunities, you got to look for change and demand. And I think you're going to see that a rotation in the coming year from technology to more consumer demanded services. If it's the healthcare industry, if it's consumer staples and discretionary, because of the demand of product, demand of service. And I think you're starting to see that rotation, especially in technology. So that's managing your portfolio, so more to come on that. But I do definitely see business models changing in the tech world to line up more with this whole AI revolution. But I'm also seeing more demand in more conservative, more value-driven type of sectors. Something to take a look at.
Yeah.
So,
It's definitely interesting and never boring. And I did want to shout out, since last week I wore, it was the 4th of July, I wore the Pabst Blue Ribbon trucker hat,
yep.
For regular people. So this week a friend of mine sent me he's actually has a trucking company.
Oh, nice.
So he sent me his trucker hat and said, "Here, wear this for all the regular people out there who work for a living." So if anyone wants to send me a hat, I'll wear it, to support regular people out there.
And as you can tell, I need a hat.
Yeah.
Pretty much living here in Florida, I cannot walk outside without one. So feel free to send me any product. If you need to get a hold of me, just check out our website. We are more than willing to support the regular people businesses. Absolutely.
I think I got two other hats sent to me that people want me to wear. So I'll incorporate them for absolutely free, just because we're supporting regular people in their businesses and their livelihood,
Yeah. Cool, man. All right. Well, this has been fun. And we'll do it again next week.
Yep, definitely.
All right. In the meantime, hit the subscribe button, hit the like button, share this with your friends and family members, and go to bestofusinvestors.com. Check out what we're offering. We are running a 14-day free trial for the Platinum channel. It is the only subscription level we have now. And after 14 days, it becomes $60 a month, but you're going to get an enormous value. You're going to learn about how to properly invest and preserve capital and make money. So check us out at www.bestofusinvestors. In the meantime, have a great week. Always be smiling, and peace be with you.
And cut.
Cut.